Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm live with another live session with you all on this Sunday morning, and hope you all are doing well on weekend. And so today I want to talk to you about a mid-cap consumer play, which is into housing ancillary and which looks good from a 3 to 4 months point of view. So we'll discuss that, and also it is a very good investment bet as well. So we'll discuss that. Plus, I'll answer your queries as well. And we'll talk a little bit about the markets. So let more people join in as it's a Sunday morning, Sunday afternoon in some places. So uh, more people join in and then we begin the session in earnest. Hope you all are doing well at the moment. Ankit, a very good morning to you. Hello to you. Uh, Lavkesh, good morning to you as well. Hope your investment journey is going well and you're doing well in your trading, because a lot of mid and small caps are doing well from the last 2.5 months. So you must be making good amount of money on that. So good morning, Bhupinder. Hope you're doing well. Uh, so that's the part. I think this party could continue with the way FIIs have come back into a buying mode. I think this could continue at least for the next 3 4 months, and then probably there'll be a little bit of correction, and things should go along smoothly. So that's the call on the overall market. That's what I believe can happen. Yes, there could be some corrections here and there in some of the spaces where things have become very heated. But overall in the market, I don't see a major correction coming through. Good morning, Varun. Hope you're doing well. Uh, so that's the point about the market. So basically, 17,500 is what we need to look at even now. If that holds over the next 1 month or so, 17,500, 600, we are headed way higher. And once the new highs are taken out, and then the mid cap and small cap index take out the new highs, I think we could be into uncharted territory for a while, and things could just go along on the upside until and unless we find a level from where there'll be a flash crash. There will be a situation where in a day Nifty could be down 400 points, uh, and mid and small caps could be down something like 4%, 3 to 4%, the index itself. And then we can safely say that okay, one top is being made. But even then, I say that a correction of 7 to 8% is not ruled out from there. And even after that, we could just go along in our on our merry way, because I think FY24 will be very big for the Indian industry. And from October onwards, the market will price in FY24 earnings, and I see 970 to 980 rupees as the ballpark figure for the Nifty for FY24, and that's where people will try to mark out as to where the market should be. So at least 20,000 to 21,000 is what I'm looking at in a year's time. That's what I feel like, that 20,000 to 21,000 by July or so is a possibility on the index. Mid and small cap likewise should end up doing even well over the next 6 8 months. And you need to understand that 2022, a major part of it till around June, so first half was completely washed off because of the kind of condition, global conditions we were in from February onwards. But as we expected, so you can rewind the tape, you can look at what I discussed during that phase between January to April, May, that the first half of 2022 could be tough. And that is exactly what has happened, that by June end, the market started to perform. And now we are seeing we are 2 months into it, and look at the way the market has recovered from 15,100, 200. And I think this trend could continue all throughout 23 if the earnings continue of the mid cap companies as well as the large cap companies, which is happening, barring IT and pharma to an extent. Other companies are doing extremely well, other sectors are doing very well. So I believe that perhaps if you go along and if you look at, say, uh, something like 2024, I think we are still not very expensive, and we should be looking at levels closer to 21,000 by then, by the end of 23. So I think in the next 15, 16 months there could be a lot of upside. Yes, there could be a correction, always there. There will always be a correction of 4 to 5% on the Nifty, maybe 7, 8%. But you need not, we as an investor need not fear that and keep on moving ahead by buying into top quality companies. So that's the call. As far as I am concerned, and most of the people on Patreon, in fact, members on Patreon, YouTube, WhatsApp, you do know about it. I made a lot of losses over the last 5, 6 months, and now trying to get back into the game, and finally have understood as to what the mistakes were earlier, and where I went wrong. So basically, that is what people who have not made money up till now and are in negative need to understand, need to gauge, and need to analyze that even if they have to take, say, 4 or 5% losses on their portfolio, 7% losses on their portfolios, or in some of the stocks, they need to get into good quality, high earnings, or margin domestic businesses. I think the foreign businesses should struggle even for the next worlds and everything else, Mindtree and so on and so forth. But even the Mastex and KPITs and this and that, everything look good. But going forward, at least for the next 2 quarters, there will be a lot of pressure because of the kind of problems that UK is facing, the kind of problem Europe is facing with gas. And so after the winter, so probably things should look better for we as traders who trade 3 to 6 months into the market. That's when probably we need to get in, even if that means that buying into any IT company 20, 30% higher. For investment purposes, these are the best levels. I think TCS, very difficult to see TCS go down below 2,900, 2,800. Very difficult to see other kinds of IT stocks go down another 20% from here. So, in that regard, I feel that one should be looking at a situation where uh, if you have a 3 to 5 year time frame, best to buy IT at the moment. If you have a 3 to 5 months time frame, best to buy Indian centric companies that are most it would be better now. So that's the call on the market. And now coming to the point of which stock that I wanted to talk to you about. I have made a number of videos on this one as well, but just by looking at as to how the stock was doing, say, recently, and the way it has moved up over the last 1 month, it has become slightly, you can say, expensive at the moment. But a 14,000 crore market cap company, a leader in its space with a lot of market share, I'm talking of Century Plyboard. I believe Century Plyboard, if you can get it around 650, 655, 645, around those numbers, or 645, 650 would be the best levels to get into. It's a 50-day moving average is around 640. I think it has strong, very strong supports around 600. If you can get it around 645, 650, those will be very good levels to get into, 4 5% lower from these levels. And on backward calculations of the numbers on EPS terms, I believe for FY24, it can come out with, sorry, FY23, it can come out with an EPS closer to 18 rupees. And on that front, with an 18 rupees EPS, I see the stock trade around 900. 18 and a half rupees EPS, 900 to 1000 is a possibility over a 1 year time frame. Over 3 4 months, a good 20 25% upside from 650 levels is very much possible. 800, 820, 830 is a possibility by January on Century Plyboard. So on a decline, not at 670, 680 that is trading at, but on a decline to 650, that will have a lot of margin of safety. At worst, will go down to 600, but the upside could be at least around 820, 830 rupees in 3 to 4 months. So Century Plyboard, with the kind of numbers, margins, it has the best margins at 19%, look extremely good. And this is one of the festive plays as well, because of the kind of products that it caters to. So a good festive play, a good marriage play, and play on the October to March quarters. I mean, the 2 quarters that will be big for the company. So, yes, it has moved up sharply from 500 levels just in June, over the last 2.5 months. But I think any declines towards 650, 640 is a great buying opportunity for the stock from a 6 months point of view. So Century Plyboard is my pick for the medium term, you can say 4 5 months time frame. All right, so I'm ready to answer your queries for the next 7 to 10 minutes. Kindly use the super chat and super sticker feature that will help you with channel. That will help you also ask me questions and eke out answers in greater detail. So why FL is not showing any correction, Abhijit, is because of its strong numbers. It is growing at 90 to 100% year on year for many quarters. And so I believe that 1200, 1250 is a strong support. Any correction towards 1250 is a buying opportunity. And I think it is headed way ahead of, I think, 1500. I think it is headed towards 17, 1800 over the next 6 months. Look extremely good on the charts and looks extremely good based on the numbers it is producing. So Taj GVK, I don't follow it, so I won't be able to comment. See, the paper stocks, I believe the rally is there, and the rally is there for a reason because the export market look good and they are beginning to show traction there. But be very careful, keep trailing stop loss on any paper stock and keep booking profits here and there. They are not, you can say, long term investment play. So Varun, Abbott and Sanofi or Nestle or Dabur or these kind of companies perform when the markets are in difficulty and there are very little number of stocks or low number of stocks that people can make money of. So in my opinion, I believe that one should avoid getting into defensives at the moment with the way the market is going and with the way uh, the foreign investors are buying into Indian consumption kind of stocks, other kind of stocks. I'm not talking of FMCG or defensives. So consumer centric companies, not per se FMCG companies, is what you need to look at, but they should be high growth, high margin business for 40%, 50% margin, at least more than 20, 25% margin. Those will definitely perform. So Manoj, Kelpest second half numbers should remain stable. They have come out with around 12 crores of sales this time around 13 crores of sales this time around. I see around 58 crores of sales in FY23 and 77, 78 crores of sales in FY24. So if you have a 2 year time frame till around 24 July, August, I think it is very reasonably priced at 58 crores of sales. It should come out with, I think, at least 28 rupees of EPS or even more than that. I think 28, 29 is what I'm looking at. But the way they are producing numbers, so 28 rupees for FY23 and with 78 rupees of, you can say, 78 crores of sales for FY24, I see 38 rupees of EPS for FY24, 38 rupees of EPS and the stock at 400 rupees or 370, 380 rupees, 10 times 2 year forward earnings. Very, very attractive. I see the stock go much higher from here the way the stock has stabilized above 320, 330. So my opinion for the numbers front, overall for the year, it should do 78 crores. It should do 38 rupees of EPS for FY24, and that's what I'm looking at in Kilpest. So Mastec at these levels, if you have not bought at higher levels, and if you have at least 2 years time frame, it looks good, but not on a short term basis. I think on a short term basis, it may just struggle. IT could still struggle for at least a quarter and a half, the way it has fallen. So I think IT should be looked at first after the December numbers are over, and probably that's where from February, March onwards, as summer picks up in Europe, that's where one should look at IT at that point of time. Okay, so Colgate HUL both are avoid. If you want to buy HUL or these kind of companies, you should have 5, 6, 8 years point of view or more. Then HUL look good. Otherwise, they are avoid. So why I ignore Tanla is because of the kind of management commentary that comes around, and the way the top management talk on Twitter, etc., and on many other, you can say, social media sites about numbers, etc., and so on and so forth, bonuses and whatnot, buyback, etc. See, it doesn't look that good. I don't want to go into the detail, and you need to understand the stock has gone from 30 rupees to 2000 rupees and have corrected sharply from that. I don't want me or anyone get into a stock which could go up, yes, could go up 4 5x, but could go down 60 70%. So that's where my problem lies. So from 2000 it went to 600 700, virtually lost 60 to 70%, and then has gone up. So uh, really difficult to understand as to how the buyback things are happening, and many other factors. So I just avoid the company altogether. So last and two, bro, Infotech, same. I have the same view as with IT. For the next 1 year, you might get 10 12% return. It might go up, then go down, etc. So probably you buy it when you really think that the tide has turned in Europe and US. DMart, from 6 months point of view, if you get it around 4200, 4 5% decline, very good levels to get in. I think there is still a target of 5,000, 5,200 on the stock. But if you have it at 4,500, you try to buy it at 45, 4,600, then the margin of safety is not there. And the upside is just about 12, 13%. So I think better to buy closer to 4,000 if you have a 5 6 months time frame on DMART. So that's the call. Sonata Software has been doing well recently, but see, another stock that I have tracked from 17 rupees, 17 18 rupees, about 8 9 years back. It has come a long way from those levels, from those that market cap. Uh, it's a very simple business. It's not something that is an extraordinary business, so I won't suggest that can give you a lot of alpha. There are other mid cap companies that are doing different kind of things like APIT Tech, or other companies in this space, which one can probably look at rather than getting into Sonata Software. See, PI industries can be bought, but I think PI is a better buy in Jan Feb rather than at this point of time. I think from January, February till July during the monsoon season, it could do extremely well rather than buying at the moment. Okay. CDSL look good after a lot of consolidation, and now it is breaking out. 1350, 1380 is your support, major support around 1350. And now there is a possibility with this news of dematerialization of insurance, etc., that we could see 1800, 2000 on the stock going forward in a year, year and a half. So, yes, it does look good. So Blue Star is a buy around December, January. It could perform now, but you will get it at better levels around January or so during the harsh winters, and then you really get in for that 25 30% upside during summer. Same with Volta. So probably these are summer picks and better to buy in late December, early January in extreme winter. That's where you can get it at a better levels to buy from a short term point of view. From long term, I see as Blue Star as a better pick rather than Voltas from a 5 year point of view. I think Blue Star can do a lot of things over that time frame. So Tata Motors, for a change, I believe, can be bought from a 5 6 year point of view because of the kind of things they are doing on the EV front. But you have to strictly go by prices, buy in distress, and hold 4 5 years to make money. Swaraj Engines is a buy during Jan Feb again for that monsoon season play rather than buying it at this point of time. That's the call. Jyoti reasons, I don't know about the company. I won't be able to comment on it. Avoid sugar stocks. That's my call. It could give you some returns, but very volatile in this market. I think better to be with other stable companies. So, always if you're holding at 20% loss, two things you can do: either book your losses, buy into companies, as I mentioned, which are into housing play or consumer plays, and are leaders, or you can just stay with the stock with another stop loss, say 4 5% lower, and hopefully during the next summer season it could perform. But your wait would be around 1 year. I think you need to wait 1 year for the stock to perform and get back to your prices. That's the call now on the stock. Okay, so Bajaj Finance at 7,000 you can buy. If you have bought at 7,000, hold. I think over the next 6 months it should perform well as well. It is a very good consumer play rather than a financial play. This is one of the very few companies in the financial space that I like. So Sequent has come out with very dismal numbers. I'm very surprised that the stock is holding. Maybe because there is a thought that these are the worst numbers. My view is that if you have it and you are in heavy losses, don't sell. Wait for next quarter numbers and then take a decision. If you have it, you're not making a lot of losses, or you're at par and not making a lot of profits or losses, then exit. Yes, and look at other companies which are more India centric in nature, because there is a lot of risk with Sequent. Because you need to understand that they have a major business, 12 13% of their revenue that comes from Turkey, and there are issues in Europe and Turkey and UK as well. Varun, thanks for your contribution. Adeco Housing generating 40% PAT. What is my view? Let me open that up. I'll let you know, because I've not tracked that stock that much, so won't be able to comment immediately. But if I'm able to have a look at it, I'll be able to answer. Okay, El Deco Housing is what you're asking about. And if I open this up, so the stock, it has a 680 crore market cap, around 690 rupees, trading at a P of 12. Uh, so basically, the company looks decent, but here is the point. So basically, what they have done in 2019 is 160 crores of sales, 30% of margins, and 38 crores of profit. And in 2022, they did profits of 51 crores. So nothing very special from a 3 year point of view that the company has done. It is producing an EPS which is pretty decent, 37 38 to around 52 rupees, may produce 60 63 rupees of EPS this year. So yes, it is trading at a very reasonable valuation. There is a chance that the stock could go up about 10 to 15% from these levels. But it is a real estate developer, you need to understand. So I am not in favor of buying into pure real estate developers play, because there are issues of debt, there are issues of other kinds that crop in time and again in numbers. So at the moment numbers look good, but going forward we are not sure. So I would say that if you have done your thorough research, yes, you buy and hold on to it, because on a PE basis it looks attractive, but not to say that it may just fly away and go up, because the stock, the see, the growth in the profitability is not that great. It's around 20 25%, not 40%. Yes, for 1 or 2 years it has been like that, but on an average it has done 20 25%. Okay. So lemon tree I think looks good. In fact, most of the hotel plays looks good for from a 20 to 30% upside over the next 6 months. That's the call. As all retail investors waiting for a dip. See, the about this call that the market is overvalued and they are waiting, people are waiting. I tell you a simple point here, not to make things complicated. And I give you my example. Just 3 months back, I was not sure about the market, and even I was talking of 14,000. and I can be very frank about it that it looked like that we could head towards 14,000. What changed my perspective has been FII buying, and FII buying has come back after 18 months or so. It has not come back after 3 4 months, or that FIIs were buying intermittently. They were selling big time. They were selling 50,000, 60,000 crores every month. So the basic point here is that market is not expensive because FIIs are buying, and the fact that if you look at the earnings for FY24 will be around 970, 980 rupees, maybe even more, but around 970 for sure. It looks pretty certain that we are headed towards 970 rupees. Based on 970 rupees at 17,000, market looks very attractive at 17 and a half times. Market can easily trade at 22, 23 times earnings. So it was not expensive at 15,000 either, but with no FII buying, we cannot expect just retail investors buying into every stock and buying big time 50, 60,000 crores. It will not happen. So once FIIs are back, the levels got breached easily and we are now closer to the new high. So retail investors need to understand how the markets work compared to the you can say the original economy or the economy on the ground. So I believe that this one factor, and with the kind of you can say gyrations we are seeing in Europe and US, I'm pretty certain that the way FIIs are buying into India, they are not buying for 1 or 2 months or 3 months. This is going to continue. So retail investors may just wait, and the correction may not come until maybe at least 10 15% of more upside move. And that is why it is paramount to at least have 90 80 to 90% investment into the market if you are a player in the market, rather than running away from the market and have 100% cash, etc. So that's my call. Your industries could change, but you should be invested into the market. So on that note, thank you a lot for being online. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. And kindly subscribe to my Patreon network. Thanks a lot.